Hi, welcome back. Sorry, a bit late. So, just trying to get ready for today. So, how's everyone? So, the topic today is why yens move so much this week. So, this week is actually very interesting week because we had three. We actually have three rate this week. First is on Thursday. We have USD rate that kept unchanged. And then the second one is GBP, same thing, unchanged. But interesting is the forecast is seven support hold, two support raise. Now 7 6 support hold, three support raise. So let's see this one. First is how many worth to increase, so three. So it's very hawkish. So initially pound does go up and but drop back down. So, but I'm not going to talk about all the Fed rate, but this week is really full of high impacts news or BOJ. What I wanted to discuss is why yen actually move before the news. So let's go to the chart. Before we go, I always like to review my previous trade call. So if everyone follow me last week, they do have some great trade. Last Friday, I talked about shorting 92. Monday, the oil just dropped, so I have taken the profit. Now you ask me, okay, what is this? So got oil will be today as it did, the momentum is up, and I was just so now whether we will see this gap be closed or not, very likely it will close. But today we are not talking about oil, we're just reviewing last week trade. I also talking about short AUDJPY. So let's look at AUDJPY together. We also make good money. Well, why I short AUDJPY? Because my macro. So I'm going to talk about again my macro. My macro last week is already risk off. So last week is Friday is 24th. We talk about the wicks is getting up, get high, and then I can see this S&P actually dropping. Most important is look at the 24. Remember, 24 is last Friday. Why I talk about risk off, potentially risk off cautious, because it's S&P going down, wicks increasing, and also the high yield spread is increasing. People is more taking more cautious to spend in credit. Credit is dropping from 79 65 69 23. Not drastic, but it's good enough for us to say, hey, market is a bit going to risk off. So my market's indication is buying defensive currency like yen and CHF. That's why I have a call on short AUDJPY on Friday as well. And it's all been very profiting. Remember, I talked about triple top and it's boom. Because today is Friday, I already taken quite a bit of profit on all my positions. I just want to go through why this move actually happened before BOJ actually announced. So a lot of people say, oh, front running, or they run before the action news. So today we're going to focus just to explain why this move so drastic before the news. This is today. So it's happened one day before. Why it happened one day before? Not on the news. There's USDJPY drop from 1 1. Let's look at USDJPY. This AUD. This is my last week. This week is just reviewing my last week. Do I wanted to make some call on today? Maybe if I see something. So why drop before the news? Okay. So all this dropping, why this large move? So let's die down. This is not just one yen pair, it's across. If you look at AUDJPY, USDJPY, pound USDJPY. So this shows this is a broader market yen rally. We have to ask, is it because of interventions? Or is it because of long position squaring, they realizing their profit, they're actually covering, take profit for the long and pushing selling the thing. So this is pretty big move, 500. Under normal conditions, it wouldn't run that fast. So let's go through some report. Reuters say, this is market news. Reuters, Japan conducted yen buying and dollar selling intervention in New York market. There were also report that U.S. authority conducted the rate check. However, we need to be careful language here. At the time the initial report appeared, Japan Ministry of Finance had not publicly confirmed the operation. So see, this move is prior news, prior Friday. So they actually sell. The move down is before the news announcement. So what happening? Is it this intervention? There's no official announcement. So this is mostly a crowded long, very crowded already. UJ has been up for so many months. So this is very crowded. So just anything. Buyers start selling and just a little bit of rumors that Japan will intervene. Everything just short rush in to sell. Buyer are selling, the previous buyer are selling. A strong seller are pushing. There's no buyer liquidity anywhere near here. So now you say, okay, what happened? Since there is nothing really major announced on Japan intervention, I do not think this move will sustain. So very likely today will remain maintaining around within this level. This is the breakout level. So I do not see today will be any meaningful move of follow through movement from this sell move. So this is first move down, pull back, second leg down. This is completed. Now we have a double bottom on the H1. So today very likely just meandering around this level below 162. I'm more keen to continue selling. If market on Monday give me the entry, market stay below 162, I will continue selling any pair against yen. So yen strengthening would remain in play for until I see other reasons, such as strong stock market recovering. That means I will continue monitor my macro data. If S&P recovering, at the moment S&P did recovering. Look through the S&P. Okay, this is 1 hour. This is so S&P very strong selling, recovering follow through. So because of that, we don't have actually risk of catalyst or incentive to continue push defensive currency like yen. So yen would not will remain maintained. We don't have a strong reason. And also wicks is going down. It's going up, going down. So the market is switching back to risk on. So because of that, I will see the USDJPY would not continue down. No reason for that. Unless sudden catalyst events happen during weekend. But for now, there's nothing. So that's it. So this strong move on UJ, and I'm calling on short AJ has been very liquidity, very profitable. I personally have make I shorted around 114 and added a few more position here. This whole leg I captured it. I actually realized profits around 112. I didn't really able to go down to 115, the bottom of it. But it's a good profit I got. When you have a trend like this, you are not able to take up the whole leg. So we call the fish. So this is a head, this is a tail. So important you get the middle part of it. That is good enough capture the majority of the middle part of the fish. So I don't actually have anything else to go through today. I don't have any pending call other than market has been turning totally to a 180% recovery, and S&P still kind of like within a trading range. But what worth notice is this is really a key level. So Monday, if this can get back down, even though this is anyone that read double candle is this is a bullish and going bar, and this is normally a very good spy setup. But be careful in a downtrend making. In a downtrend making, I mean, if this is just the beginning of a downtrend, this is sometimes is a trap for buyer. So if we were to take this one next Monday, that risk on market scenario come in, we must have to watch this level 7,450 cannot be closed below. If it's closed below, we still have a broad cautious risk off scenario play out. So just be mindful. I don't have any trade today. I don't really feel too well to call a trade on Friday. But I myself looking at gold at the moment. If this is pretty interesting to me. Okay. Remember, gold is this down move is driven by the yield. So the yield is strong. So remember, if the yield is dropping, USD is continue above 100, gold could potentially, this is actually a reversing. So this triangle pattern are not really telling us much. It is a trend continuations breakdown. Could it be this? Trend resumptions. Oh, sorry. Let's go back. Let's go. So can it continue trend continuations, or this is the bottom and reversal? We don't know yet. We don't have any. There's a lot of conflicting about gold now. Yield is still very high despite this 2 years yield is going down yesterday, but today rising up. So as long as the yield is strong, gold cannot really rally too much. It will stay in a very meandering, like sideways market we call neutral. And gold also depend on the real yield. This is the real yield. Real yield is actually on an uptrend, so gold very hard to, because when the yield is good, gold is non-yield instrument. People would rather buy yield product. That's why gold very difficult to go up if the yield are strong, despite the fact that um, CPI is cooling off. Fed is not as hawkish as we wanted them to be. Very likely they will cut rate in the near future. So despite all these things, will the yield go down? We don't know yet, because as far as we know, the Fed rate is still very high. So gold to me is sideways market. We need to watch this level very closely, 4,000. Could break it down. I have seen some market analysts say yes, they will. They do believe this is a continuation. And further down, some of them saying, but I need more evidence for me to say so. As so far as I can see, this is just an equilibrium. It's a two-way. It's not a high probability trade. It can be two-way. It can be long. It can be short. So no trade for me for gold for moment. But next week we will see whether what happened next week, and we will see more development in the market. Maybe we have some trade, either long or short for gold. Good luck in trading.